Let's talk about one of the most exciting and advantageous uses of a HECM reverse mortgage. It's called the line of credit. Even though your cash flow in your investments may be just fine and you have plenty of money for now, 20 to 30 years of retirement is a very long time. You may find it's very prudent to ensure that a portion of your home equity, an essential part of your nest egg, is readily available in cash without having to sell your home or try to go out and get a mortgage in a difficult time of an emergency. Your financial advisor has probably already encouraged you to have a line of credit for unexpected or planned purchases or shortfalls in cash flow, and that might have been fine back in your 20s or 30s or even your 40s and 50s. But it's a little bit dangerous when it comes to your retirement years, because when you take money out, you have to pay it back. It can be canceled at any time, depending on what's going on with the economy or your own personal situation. A home equity conversion mortgage or reverse mortgage has a clear-cut advantage over those traditional credit lines that you've known about in the past. Because it has a growth feature and it cannot be canceled because of market conditions or for any other reasons, so long as you continue to abide by the loan terms. So it's always available, and the unused funds in your line are guaranteed to grow regardless of what's going on with the general economy. It grows at the same compounding rate as the loan balance, and it grows even more when voluntary prepayments are made. So if you take out a HECM at age 62 instead of 82 and you leave the funds to grow instead of using them, it's possible that the credit line could grow to be even higher than the value of your home, especially in areas of the country where home values don't necessarily increase substantially. In fact, you could potentially have a substantial credit line available in your later years when you may need it the most. You can draw out that home equity and still live in your home by only paying your necessary home expenses, such as taxes and insurance and home maintenance. The funds left unused in the credit line don't accrue interest or mortgage insurance. They're simply pledged funds available for the borrower to access as needed. It's totally okay if you don't need the money right now. In fact, you might be able to use it for fun things and hopefully not for unpleasant things like health problems, but that's the whole point of having an available line of credit. You can proactively use the credit line as a standby resource for any future needs. Maybe you want to bridge the gap for Medicare from age 62 to age 65 when you don't have health insurance, or pay for long-term insurance or life insurance or long-term care. So I get it. Fairway's reverse mortgage planners have worked with thousands of families, and everyone has a different situation and a different set of needs, challenges, dreams, and desires. You may think, well, this really isn't for me. This is for somebody else. However, if you think that it will be well worth your time to meet with one of our reverse mortgage planners to receive a personalized, no obligation consultation, you can see if maybe a reverse mortgage might be right for you and your family. Don't neglect this opportunity. It might make a huge difference, not only for your retirement, but for the legacy of your family.